Right. Hello, dear friends, potential mortgage borrowers, anyone listening. If you've got any form of bad credit and need a mortgage, this is the episode for you. We're talking about some incredibly important things you really need to know about. I do encourage you to all listen to the whole episode. Obviously, those of you who've got a life to lead and you know, less time on your hands and don't want to listen to us for 20 minutes talking about mortgages, we start off with some stats and then we got an overview of 60 seconds to get your teeth into. Anyone else who wants to hang about, listen to the whole lot, there's some great stuff in here. So quick introductions. I'm joined by, and what a coup this is, one of the best bad credit mortgage experts, Nathan. By sheer coincidence, happens to have the same beard and haircut as me, which isn't intentional. Does not reflect the thoughts and feelings of Online Mortgage Advisor. Other haircuts are available. Nathan is, I'm glad you didn't wear a white shirt as well, Nathan. Thank you for not doing that.
You're welcome.
About shirts, actually, that my wife Dahlia bought me a new shirt for the podcast. I tried on earlier and it was see-through. It was you know, reasonably priced one from Zara, and you could see straight through it, so I can't wear that. Nathan, anyway, is an award-winning broker. Worked with us for a number of years now. You've just set up on our appointment booking system, I think, Nathan, haven't you?
Yes, I have. Yeah, looking forward to that.
So if you're listening to this, you may well be lucky enough to be sitting down with Nathan at some point. If you make an inquiry, I'm Pete Mugleston, one of the owners here at OMA. I am a mortgage evangelist. I just bloody love them, Nathan. And OMA, for those of you rare people finding us for the first time, we are the biggest and best mortgage website in the UK. But I'll plug us in a minute. In this episode, we're talking about bad credit mortgages, something close to my heart. I started my career as a bad credit broker. We built OMA helping customers with bad credit right back in 2009 when there was no one else was bothering. There was no lenders really for customers in that market, and no one was working online to help them. So that's kind of where we started out. And I love helping customers with bad credit. It's amazing. You literally change people's lives when you help them and other brokers haven't been able to. We'll get into a little bit more about the range of broker and why it's important to have a specialist in a minute. In the episode, we're going to cover types of credit issue you can get approved with, show you some of the worst credit you can have, so anyone who's got better credit should take comfort from it. Amount of deposit you're going to need compared to clean credit mortgages, how affordability might differ, what rates might look like differently. And as always, we'll answer some crazy questions from customers. So before we get going, let's start off with some stats. I think it's important for people to understand the market, and I'm going to wow you here, Nathan. As you know, our mission is to help 1 million people get the right advice. As of today, how big do you think the OMA community is?
Hundreds of thousands, it must be by now.
It is hundreds of thousands. It is. As of when I checked it the other day, 509,679.
Wow.
It'd be more since then because we get hundreds a day. So, and that doesn't include phone calls. There's some phone calls on top of that we haven't included, so it's probably closer to 600,000 actually. But let's be modest. So, how many of those do you think are bad credit customers?
I would say around the 30% mark, 25, 30%.
You're not far off, a little bit over. 133,000 customers of bad credit in our community. Wow. We do loads of it. And I saw that and nearly fell off my chair. I knew it was going to be a big number. But anyone who is asking how the hell do they help that many people, obviously it is down to our amazing network of experts. We're really picky about who we work with, especially when it comes to the more tricky scenarios, because we know how important it is getting the right broker to get the right access to lenders and the right advice, which we will talk about more about in a minute. Nathan, well, you might know, but have an educated guess. How many lenders do you think there are active in the market at the moment?
Must be over 90 at least.
Yeah, there is. So this is something I've actually contacted the FCA about. I'm still waiting back, but there's articles online suggesting that there's 340 regulated lenders that are reporting, they're required to report to the FCA what's happening, since records were reporting it in 2007. Updated in 2016, that number was 300. They're not all actively lending to new customers. So I've had to do a bit of digging around. It isn't openly actively available anywhere by the looks of it. And the numbers that we've come back with is 118. So triple figures. So yeah, good guess. Any idea out of all of those lenders, how many of them you need a broker to access?
Maybe around 30-40%.
Yeah, bang on, 36%. So why that's important is because if you're a customer who wants to sort the mortgage out yourself, you don't want to use a broker, and there are about, and people doing research will be listening to this now are in that camp, it's impossible for you to be whole of market. So even if you haven't got bad credit, a third of the market, you need an expert broker to access, because they can't lend to you directly. And for me, you know, I wouldn't want to go to my doctor and them only have 2/3 of the treatments available. You would want to have all of the treatments available. So using a broker, you have to have one in order to and for bad credit customers, even more so. We've done some research recently, and there's approximately, well, it depends how you define bad credit and what level, but that are accepting some form of credit issues. 59 of those, so about half of the lenders in the market consider some form of bad credit. But actually, out and out bad credit specialist lenders, have a guess, Nathan, how many do you think there are?
40, 50?
Not that many. So, well, I suppose it's an ambiguous question, but yeah, there's that many-ish that will accept credit issues, but out and out like specialists that will accept really severe credit problems.
Oh, sorry.
There's about 16.
Right.
So, and out of those, you need a broker to access all of them.
Right.
So you can't lend, you can't borrow from those specialists that go in direct to most of them, which is massively important for people who've got bad credit. So that's why we exist, why specialist brokers exist. One last stat before we get on with it. We surveyed recently 100 brokers at random. None of them were OMA brokers. And only 30%, so a random sample of 100 brokers, 30% of them say they do bad credit on a monthly basis. That's only a third. Only 10% said they do bad credit weekly. And 20% of brokers that we surveyed don't do any bad credit mortgages.
I can believe it.
So getting the right broker to get the right lender is massively important. You know, the analogy I like to use is that if you're about to have surgery, you don't want your surgeon to sit down and be like, right, I'll go and do some research. Leave it with me, and I'll find out what I need to do. You want the surgeon that does that type of activity, that type of operation every day. That's their world they live in. That's how we look at it for mortgages. You want the type of broker who deals with bad credit mortgages and your type of bad credit mortgage every day to give you the best chance. So of all the brokers that we surveyed, only 5% had set up accounts with all the bad credit lenders, which is mad. So then if you think about, even if they had access to those lenders, they've not ever used them. So, and another interesting thing, of all the brokers who said they don't do it regularly, how many of them do you think have on their website that they do? All of them.
Yeah.
All of them. They all have. The research we did, every broker said they do bad credit on the website.
Right.
But then the ones that we'd surveyed don't do it regularly, but they say that they do.
Right.
Which to me is interesting and telling. So getting it right, you need them access to as many lenders as possible in order to give yourself the best chance of approval, and you need a broker to do that, and you need the right broker to do that. So overview in 60 seconds, all you need to know about bad credit mortgages, and then we'll go into that in a bit more detail. So the main thing for me, comparison tables aren't going to tell you what you're eligible for. They'll give you rates, they'll give you an idea. They might, well, they don't have all the lenders on them, but they don't then tell you which ones you will and won't get approved for. You can't start at the top and work down. You're going to have 500 blooming credit checks on your file, and you're going to kill your chance of approval. You need to start in the right place and really approach the right lender first, so you're not getting declined all the time. There's loads of types of bad credit, obviously. Small stuff like missed payments, and unsecured credit arrears on credit cards or loans, or your phone bill is the smallest thing that a lot of lenders ignore, actually. There's defaults where you let those payments go for 6 months and then you lapse. CCJs, debt management plans, IVAs, bankruptcies, and people who get repossessed. What's important to know is that depending on your scenario, actually, there's lenders that will lend to you now, even if you've had that on your credit file in the last 6 years. And a lot of brokers just don't know or want to deal with you if that's the case. But it is possible. Loads of different types. Depending on the type of issue you've got and how recent it is, will dictate typically how much deposit you need and how much risk the lender's going to think that you are. But there are lenders, even if you've got recent issues, there are still potential lenders for you. The lenders, typically affordability can be much the same as the rest of the market. However, sometimes you find that they're a bit tighter on what they would lend from an income multiple than maybe some of the mainstream lenders. Rates are still competitive. Typically, if you're higher risk, you'll pay more, but it does depend on what type of credit issue you're talking about. People would consider themselves as having credit problems if they had a default 5 years ago, or they had missed payments a few months ago. Actually, they might still be eligible for some of the best rates. So, and another thing we'll talk about in a bit is about the different types of lenders. There'll be some you've never heard of that are brilliant, amazing lenders, and some borrowers are maybe unsure about going with them because they don't know the name. Well, that's most of the specialists are like that. So anyway, if you've heard enough at this point and it sounds like you want to get an approval, drop us an inquiry on the website, give us a call. We'll get you in touch with one of the bad credit experts. One of them might be Nathan, if you're lucky enough. So Nathan, let's get into a bit more detail. Why don't comparison sites tell you what you need to know? And what the hell are they for if they can't show you?
Well, I think firstly, customer mindset. Historically, we've been trained to think the best rates are generally the best deals, and that is typically what comparison websites will show you. So you'll go online, have a look, and they tend to hit you with the deals with the best rates, and then somewhere in the smaller print it'll say, oh, by the way, it comes with a fee. It's not always the best way to look at it. You normally look at true costs over your initial term, but I suppose it's just a comparison website, and generally you are just comparing rates. So that's why it's always beneficial to speak to a mortgage broker.
And then I guess within that, they're not telling you which ones you can get. They're just telling you what's available.
Yeah, they're just, as the name would suggest, you're just comparing various different deals, and that's where you need to go one step further and speak to a broker to see if you're actually eligible for those deals, and if not, which ones you are eligible for. Yeah,
I think the problem with that I see with it is, and why brokers exist, I guess, if you were going to get a comparison table of all the lenders you're eligible for, you need to apply to all of them first to find out.
Yeah.
And every time you apply, you're going to have it's a massive job. You can't apply to 118 lenders at once, right?
And you could look on the comparison website and then fumble around in the dark for days looking on every single lender's websites. Or you could just speak to a specialist broker that knows exactly where to go. They've got the finger on the pulse, and it's all done for you. Yeah.
On that, if let's say you did want to, we did a survey of customers last year, and something like, I'll dig the details out. It was like between 30 and 40% of people hitting our website wanted to do the mortgage themselves. If that's you, what's the dangers in doing that when especially if you've got credit issues and you don't know who you're eligible with?
Well, you mentioned there about doing lots and lots of credit checks. So if you think you can do it yourself, and you're fumbling around the dark, it's the time wasting all that time looking for the right lenders, then potentially having to do affordability calculator yourself, then potentially doing credit checks with all those different lenders, you could potentially put yourself in a worse position than just speaking to a specialist that will always have your best interest at heart and knows exactly where to go at the beginning.
Why is it a worse position? What's damaging about that?
Well, if you're doing lots and lots of credit checks, now generally speaking, the best thing to do is to initially look at soft credit check lenders when you do an agreement in principle, which is normally the first step, which your broker would normally do for you. But if you're unaware that those certain lenders you're going to might do a hard credit check, you could have a combination of lots of hard credit checks, soft credit checks in a very short space of time, which can have a detrimental effect and potentially bring down your credit score. So when you actually do stumble across the right lender, it's had that much of a bad effect on your credit score, you might not actually pass a credit check.
Yeah, when they would have approved if you'd gone to them first.
Exactly.
I think, credit checks, this is a podcast for another day as well, but like, there's so much to it that I would love people to understand how much they can impact what they're doing and how dangerous it can be to start scattergun applying everywhere. You mentioned soft and hard credit searches, soft being where the lender will have a look at your credit file but not record that an application's been made, and hard is when they do. And then obviously when a new lender is looking at it, part of their decision making is, well, how many other checks has this person had?
Exactly.
And if there's loads of checks on there recently, it looks like, well, you've tried there, you've tried there, you've tried there. You're higher risk, either because you're trying to apply for loads of stuff at once, or maybe they've said no. And why have they said no? And actually, maybe that means you're higher risk. So you've got to be careful about that, definitely. Yeah, makes sense. So it would be amazing if there was a service that could give you your eligible comparison table, but that is why you exist, right? That is
exactly. And the one thing about comparison websites is they've not been able to capture enough information about you specifically. So they're not going to be able to tailor the deals that they have, the thousands of deals they have on their, inputted in their system to say, right, you are eligible for this. That's where the broker comes in. Yeah,
because there's so many different data points, right? It's not just credit as well. It's how much what your income is.
Yeah.
And then, I mean, we have got other podcasts about that, but there's so many different nuances to different income that can be accepted.
Yeah. Income, types of employment, types of contract. Have you got a permanent right to remain? There's, just to name a few, there's so many things that can go into it.
Your visa status, the property that you're buying and or refinancing and what that's built of, how old you are. There's loads, there's literally millions of different points and opinions from different lenders. So sticking that in one system is I don't want to say impossible, but not straightforward. Right. So if you're listening to this and you've got pretty bad credit, or you think you have, how can you give me some confidence, Nathan, that I'm going to be all right? What's the worst credit you can get approved with? And then anyone else better than that is going to take comfort in it.
Well, the good thing is, Pete, there's at very high level, not to say you can have any type of credit, but there's very few situations nowadays, because there's so many specialist lenders out there that exist for people with poor or low credit. There's very few examples that would prohibit you from getting a mortgage. Just to name a few of the, I suppose, more extreme ones, bankruptcies, IVAs, DMPs, depending on your level of deposit and exactly when those things occurred, there will more often than not be options for you if you really want to proceed at that moment in time.
Yeah, so I've seen it where someone who's, there's a whole range, as you say. I've seen it where someone's had 20. I've done mortgages with people who've had 25 defaults CCJs, more than that. I remember a guy who was working with, helped one of our customers, and I think there was something like 65 defaults on there. Just a silly number of defaults. But they were a little bit older, and there's lenders ignore them after a cut-off point. So at the time, it was like after 12 months, we just ignore it.
Yeah. And
responsible at warranty.
On that point as well, some lenders will ignore defaults and CCJs if they're below a certain amount, so
Yeah.
below a certain value, which typically occur with phone bills, parking tickets, things like that can just happen to anybody.
Yeah.
You know, whether you work in a shop or whether you are a surgeon or a barrister, you know, everyone drives a car. Sometimes you park in the wrong place. It can very easily happen to you, especially if you ignore them. But
Yeah.
which is why these specialist lenders understand that it's not that you've done anything extremely bad. It's just that you've maybe had a lapse in, or you know, judgment or an admin error or something like that.
Yeah, well, I've seen it where, you know, your phone bill, you move house or something, and you feel like you've cancelled your BT, whatever, or what, and then they've carried on. So there was 5p outstanding on your contract, and they've carried on chasing you for it. Yeah. So and a lot of lenders just ignore communications defaults anyway. So loads of credit issues is okay when they're a certain age. Also, I've done mortgages with people where they're currently bankrupt, and you can annul it. I'm not saying everybody can do this, but if there's equity in the property, for instance, you can refinance somebody to pay off the bankruptcy and then get it annulled. But if you are currently bankrupt, that's not possible. You can't do any more borrowing. There are still lenders that will lend to you after the discharge, because obviously you're high risk at that point. They want to know a lot about why the bankruptcy was in the first place. And they ask for more details about it, and you need more deposit, obviously. But it is possible. So if there's people listening to this and they've got defaults, or they're in a debt management plan or CCJs that are more recent, you know, if they've got a bit of deposit, there's going to be lenders for them. In terms of deposit, whilst we're talking about it, what if you've got credit issues, is it possible to get a mortgage with a smaller deposit?
You probably look, depending on what, but again, very top level. If it, you know, you're probably looking around the minimum 15% deposit, ideally. So, but to be fair, you know, it could be worse. 15%'s not the end of the world for a lot of people, but granted, it's not 5, it's not 10%, but that's why it's so important to speak to a broker, because if it's just a bit of light adverse credit, like you said there, communication default, CCJs and things like that, there may be things by looking at your credit report that the broker can do to try and potentially either help you with a high street lender, or if not, a specialist lender that's going to be looking for, say, around a 15% deposit, depending on your level of adverse credit. Yeah,
so it's the specialists that start at about 15%. Although some might do a bit smaller deposit than that. But mostly it's how recent the issues were and how severe they are. And if they're not that recent or not that severe, actually, small deposit, you can still do something. Okay. Affordability. How does affordability work? So how do lenders calculate affordability kind of high level? And is it different with bad credit lenders?
So it's got to be fairly similar to high street lenders, because, you know, the FCA tell lenders how they have to work out affordability and things they have to take into account to make sure that customers are continuing to be in a safe position. So generally you look at, obviously, income, outgoings, general day-to-day outgoings. You know, certain things will be factored into an affordability calculator without you even needing to give that information, like council tax, utility bills and things like that. However, with specialist lenders, because they are manually underwriting your case, as opposed to a high street lender just doing a kind of a computer says no initial credit check scenario, where if you don't pass the credit score, it's kind of a no, we can't help. A specialist lender is more interested in your actual credit report, therefore they're actually looking at it manually, which means that when you look at affordability in a calculator, they're going to be a bit more interested in the granular detail. But your broker would take care of all of that. But at very high level, it's your income, your outgoings, and, you know, generally speaking, it's fairly similar to high street. You might, if you had a customer that had a job with no outgoings or no debts, You're looking between 4.5 times to say conservatively.
Yeah, and there's some lenders will do a bit more than that, which
we've
got another podcast for. But if you're looking to borrow 5-6 times income, there is still options there. It just depends on the income and your situation. But okay, so if I wanted to apply for a bad credit mortgage versus maybe a high street one, what's the process and how is that different?
Well, one of the main things about dealing with a bad credit broker is that you mentioned there's so many lenders that you may not have even heard of as a customer. And a lot of the specialist lenders only deal with brokers. So you could be, again, looking on comparison websites, see lenders that have popped up, and you might not even be able to do it yourself, hence why you need a broker to step in. And because it's a more specialist area, you really need that broker that is doing the right thing for you. So if you wanted to apply for a bad credit mortgage, get in touch with somebody through OMA.
Obviously, start there.
Obviously. And let's say you were put through to me, we would do our initial fact find with you. So our first consultation, find out all the relevant information about you, your circumstances, so I can make the best possible, recommendations to you. Depending on what situation you're in, let's say hypothetically you've already found a property and you're interested in buying it. I would then obviously, based on your fact find and your information, know exactly where to go straight away, be able to give you some options at the very beginning. Normally we do an agreement in principle at that stage just to make sure we've got that first hurdle out of the way, and then all being well, we would then gather all your documents and relevant information and then apply for the mortgage on your behalf. Once it's going through the application, the broker would, or me, would then take care of everything, make sure all the relevant documents are submitted, we'd place you with the correct lender, and then we would keep you up to date all along the way. So going back to the point we made earlier, how much easier does that sound versus stumbling around in the dark?
You've got. I think the point is you can't really apply for a mortgage on your own anyway. Because even if you go direct to the bank, and if you've got bad credit, I wouldn't recommend wasting your time. You are speaking to somebody there who's doing that. So, you've got to speak to somebody at some point, regardless. It might as well do it up front and speak to somebody who can then do the rest for you. So in terms of bad credit then and what you would recommend for people, is it possible that someone might be able to clean up their credit report, or should they just wait until the issues they've got are older, or what can people do to help improve their situation?
I think firstly, engaging with a broker that you can trust. That broker is going to be understanding that you might not be in a position to proceed straight away. Sometimes a plan needs to be put in place so to recover your credit history, and depending on that situation, a broker like myself who looks at credit reports all day long can see, right, where are the quick wins, what can we fix, is there anything that we can do to kind of have a maybe not an immediate impact, but maybe kind of like a 3 to 6 month impact, because obviously your credit report does need to recover. But by speaking to a broker and finding a broker that you trust and that you get on with and that knows what they're talking about, looking at your credit report at the very beginning to see what the options are, we can then start to put a recovery plan in place and say, right, this is what we're aiming for. We're aiming to try and do something in 6 months or 12 months. Because as you alluded to earlier, every specialist lender will have various different levels of deposit that they require, different types of deals they can offer you, depending on exactly when the bad thing happened and the time that has gone in between that.
Yeah. Okay. Makes sense. So, and anyone who's been declined, by the way, if you listen to this and you've been rejected, you should take heart in the fact that happens all the time. Lots of applications first time are declined, and lots of customers, a massive percentage of customers that come to us have already been knocked back, even if they've had a broker. And we've still been able to find the expert to help them. In fact, oftentimes we've seen that a broker's applied to a lender been declined, and then we've passed it to an expert who knows what they're on about, goes to the same lender because that was the best deal and gets it approved with the lender that they were declined with before. Oftentimes it's not just about picking the right lender, but it's how you present it to the right lender in terms of the justification. As Nathan, as you said before, it's manually underwritten by a human who is looking at the case, looking at the application, looking at the circumstances, and trying to make a judgment call. Does this fit our policy or not? If not, is it close enough to have a discussion about, maybe considering? And that is all based on how it's presented. And we've seen no end of brokers that are successful when a previous broker has been unsuccessful because of how they present it. And also actually the relationship sometimes with the lender, because there's exclusivity there as well, right? Before the call, Nathan, you mentioned one of the lenders have their kind of special club that they have that not every broker has access to. So you find that really, I mean, my advice would be, if you can clean up some of your credit report, so there were some issues on there that actually were errors that you can get corrected, and you need to write to the providers who's done it, and your broker can help you with that anyway. But also, most importantly, make sure you've got access to as many of the lenders as possible. Right at the start of the call, we were talking about the stats and the number of lenders there are out there. Well, if there's 100 and odd lenders available, and you're working with a broker who's only got access to 60 of them because they're on a limited panel, then they're only going to be able to give you 60% of the chance of getting the best deal. If you're trying to do it yourself, you are not going to have access to the lenders that you need to. So using an expert who has the relationships, but also not just the access, but the relationships with these specialist lenders, because they might have access to exclusive deals that you would never be able to approach. And not just that doesn't just mean better rates and cheaper interest. It might mean the difference between a yes and a no.
Yeah, and having that word access, having access to underwriters. You know, you as a customer trying to do a mortgage yourself will not be able to speak to a lender's underwriter, whereas brokers generally can, but especially a bad credit broker that's dealing with these underwriters and dealing with these lenders all the time, the chances are they'll probably be on first name terms.
Oh, of course, yeah. I mean, some of the firms we work with have underwriters in the office, and they come and visit, and they can go to their offices, and you know, they get the opportunity to put your case across, because most of the time we're in a scenario where you've got borrowers who oh, hang on a minute. Sorry, Nath.
That's all right.
Oh, babe, thank you so much. We're just in the middle of recording a podcast. You've walked in.
I've just walked in.
Yeah, you've just walked in. Bless you. It's stopped now. Thank you.
Is it?
Yeah, it's all right. Well, I'll have to cut it out.
Yeah.
Say hello to Nathan.
I'll have to edit that one.
Yeah.
Make him sandwich though. It's not just
Bless you.
Do you want us to pause so you can eat it?
No.
Sorry.
It's really annoying. That was so nice of you and lovely. Thank you.
What side on your side?
I do have on air. I need to put on the side, don't I?
Leave it 20 minutes.
Live.
Yeah, well, I'll be done soon. Thanks, babe.
Yeah.
You eat that while it's hot. I think
No, it's all right. Let's just fucking finish it. I've annoyed her now, haven't I, by saying that was really annoying. But she knew she fucking knew I was doing this anyway. Right. Where were we?
You were talking. I think you were kind of wrapping it up, and we're going to go on to customer questions. I think.
Oh, fucking hell! I forgot where we're at now. Right. What point was I making? We were talking about access, weren't we?
Yeah.
Access to lenders, and the relationship, how important it is having underwriters. Yeah, we've seen it where brokers have got lender underwriters in their office with them, and they can go to lenders as well. And having that relationship is something that not every broker has.
Yeah.
But when it's so important that the case that you put forward is the right one, brokers won't have the ability to, and customers themselves won't have the ability to put their case forward. And often, like, the issues that happen because of a life event.
Yeah.
Not most people who've got credit issues aren't frivolous, spenders who have just, they're not bothered. They're just taking credit where they can and then not paying it back. The majority, almost all actually, people who I've ever worked with anyway, are not like that. They are customers who have had a life event that has impacted them. And that might be they've lost a job, or they've had an illness or a bereavement or something like that that has meant they can't work and their income's affected. And then obviously they're not then able to fulfill the obligations they've set up. And as a result, lenders are sympathetic to that.
Yeah.
A lot of people will view wrongly lenders being, saying no and rejecting them, and these institutions that there's some sort of entitlement to borrow from. And that's not the case. I think that most lenders are looking to help. But obviously they've got a level of risk that they're prepared to and are able to accept, and there needs to be a line somewhere for them.
Yeah.
But they're very sympathetic, and often actually when there's policy exceptions, which is something that people listening to this may never have heard of, that's when you've been declined, but the broker is that supportive of the case, they can appeal it, and they can go to the lenders, development managers and underwriters and say, look, I know this isn't within policy, but would you consider it? Because actually the issues are more severe than you're prepared to accept. But the reason for it is this, and here's loads of other stuff that support the case, and actually why that will never happen again, and how it was extenuating circumstances. And we've seen no end of cases like that go through that would otherwise have been declined. So getting the right broker is absolutely essential. Great. Okay, I think we've covered most of the stuff there, credit issues, Nathan, in pretty detailed level. My favorite bit, customer questions. So we announced we're doing this episode and asked for some questions to be sent in. People have sent voice notes, so let's use them, and we can kind of understand what they're doing and see if we can give them some advice. So first one, Charlotte. Okay, so Charlotte, the debt management plan with CCJs as well, wasn't sure she'd get approved, and our website suggests she might be able to, and wants to know a bit more how much she can borrow.
Okay, thanks for your question, Charlotte. So in answer, yes, OMA's website is correct. So generally speaking, if you've got a DMP and CCJs, there are certain lenders out there that can potentially help. At a very high level, in terms of what you can borrow and affordability, like I mentioned earlier on, it'll be down to your income and your outgoings, and obviously we'd need to look at your DMP just to see, that would probably need to be taken into account as well in terms of any commitments that you've got towards that. But again, speaking to a broker, they'd be able to do a in detail affordability assessment with you. Yeah,
the rule of thumb roughly is going to be 4 or 5 times income as a max.
Yeah.
Some lenders might go more than that. Depends on the detail, how much deposit you've got. But certainly, if you're in a debt management plan right now, then there are lenders for you. You would hope that the debt that the CCJs belong to were part of the debt management plan, and they're being paid off. But it doesn't necessarily, it's not necessarily true. And actually, this is a misconception that you need to pay your debt off before you make a mortgage application. Actually, you might be better off keeping that money and putting it in as your deposit and not paying back your CCJs, for instance. Because not every lender wants you to have them settled if they're still outstanding. The fact that there was a CCJ is the main concern, not necessarily whether it's settled or not, although some lenders do want you to pay it off. Next one's Elaine.
Okay, so absolutely. This is part of the thing around the being a broker specialist, and so you're not going to walk past them on the high street, but they exist to work with brokers. And the reason they do that is because it's a much more specialist case. Therefore, you need a broker who specializes in it to actually help you. But in short, yes, you can absolutely trust them. Bluestone and Pepper, really, really good lenders. Absolutely, you can trust them. They're regulated by the FCA as any other lenders are. The only difference is you don't walk past them in the high street.
Yeah. Okay. And there's loads of other lenders out there as well that might consider you. It does depend on the situation that you're in, and I'd make an inquiry and then someone will give you the right advice for that. Okay, great. Thanks, Nathan. Next one's Paul.
Hi, Paul. In answer to your question, again, depending on your level of deposit and exactly, all the other circumstances, yes, there are potentially lenders that can help you in your situation.
Yeah, what I'd say with that one, if you're bankrupt 2 years ago, were you discharged 2 years ago, or did the bankruptcy happen 2 years ago? If you were bankrupt 2 years ago and you maybe been discharged for a year, there's fewer lenders for you than if you've been discharged for 2 years or 3 years or 4 years. The further away the bankruptcy discharge was, the more lenders there are, and the smaller deposit you'll get away with. If you're currently bankrupt and not discharged yet,
yeah,
it's not possible. So, Sal, is the application and are the lender's criteria the same if it's a remortgage or a purchase?
So in terms of the actual application, going for the application is quite similar in terms of the process. You usually do an agreement of principle, then apply. In terms of criteria and things like that, again, yes, it's still quite similar, because if you're doing a remortgage or a purchase, you are still approaching a new lender, and therefore they will look at your circumstances in a very similar way. So yes, quite similar.
Great. And we've got time for one more. Is Schumer. So Schumer is not able to get a mortgage, been to a broker who said they'll hold the market and is getting a bit stressed out about it. What can she do?
Okay, so it's all well and good them saying the whole of market, but as Pete mentioned earlier on, lots and lots of brokers say they're a whole of market, and they might even have bad credit specialists on the website, but they might not either have the time or the knowledge or the want to help, because they deal with prime customers as well. So that's why speaking to a specialist lender, through somebody like OMA, obviously, you will speak to somebody who lives and breathes to help people in your situation. So it may be that you've just spoken to the wrong person and you needed to speak to a bad credit specialist at the very beginning.
Amen. I agree. So yeah, mate, we've got your details. I'll pass, in fact, all of the customers who've made inquiries, I'll pass over to you, Nathan. You can reach out to. So that's pretty much. Is there anything else, Nathan, we've not covered, do you think? I feel like we've captured most of it.
No, I think it's a really good overview, and anybody out there that does want to, speak to a bad credit specialist, absolutely, it's worth doing.
100%. Right, thank you everybody who's listened to us all the way through. Appreciate it. See you next time. Cheers.
Bye.